Welcome back to Power Lunch. In a rare sell call following a major CEO shakeup, Jefferies is downgrading Starbucks to underperform, citing a long turnaround ahead for the company, despite the stock being up more than 20% since Brian Niccol was announced as the new CEO. Our next guest says the rally may be overdone and we could be due for some downside. Joining us is the analyst behind the call, Jefferies Andy Barish. Andy, it's great to have you. And so far after Niccol took over, there were a raft of upgrades to the stock. And why are you going in the other direction?
Yeah, good afternoon, Kelly. Thanks for having me. I think it's just the reaction has been so positive that it's now taking into account the full turnaround already having taken place when Brian's just really getting settled in. And we like Brian a lot. We just think that there's a lot of work to be done here to get this business stabilized and then moving in the right direction again.
Do they have to kind of break things in order to put it back together, so to speak?
A little bit. I think there is some cultural and people issues that have kind of crept in over the last 18 months under the prior leadership that has created some challenges and a little bit of operational issues that are the first thing I think Brian needs to address. And obviously he's not the only one that will do that. He'll be, adding to the management team and making changes, as we've already seen a little bit in terms of some of the announcements of departures of existing Starbucks executives.
When I've patronized Starbucks in recent times, there's several things that stand out to me. One is it appears to me that they have too many combinations and choices on their menu. That's number one. Number two, their staff seem overworked. They've got digital orders coming in. They've got drive-through orders coming in. They have walk-in customers coming in. And third, the overall customer experience isn't as pleasant as it used to be, and the prices are higher. Where does he start?
Yeah, those are all very key points. I think simplification will be the name of the game. Again, under the prior CEO, there was a lot of innovation that really seemed to be spinning its wheels and not generating incremental customer visits. And as you mentioned, Tyler, adding a lot of complexity and frustration to the partner baristas who are trying to execute this experience for the guests. And if they do a better job and they're happier, more guests are likely to come in. So it's really, I think the first step is kind of a few steps back and simplifying and trying to get that partner experience improving again and having them buy off on the vision to deliver a better customer experience. And then we'll see where it goes from there.
At what point do you kind of wait for a reset? Or some would say, okay, fine, there's more downside ahead, but is this still a good entry point? How quickly can he start to pivot the ship? Because this is, after all, kind of a marketing-driven business, so maybe it would be a little bit easier to fix than, say, Boeing.
There's some aspects of truth to that, but it's obviously a lot larger, more complex, more global than Chipotle, where Brian executed a fantastic turnaround and then growth over the last 5+ years. So I think it's going to take a longer period of time. He's got to build his team. He's got to get through expectations for fiscal 25 that they need to lay out in late October when they report the fourth quarter. And all of these things are going to point to sort of uncertainty and, again, complexity that leads to, I think, some uncertainty in the stock and having it drift back in to where it may wind up being, a little bit more attractive again from a valuation perspective, because I think the valuation has kind of gotten ahead of reality here.
All right. People are excited. They want their Starbucks to get better. We'll see if he can do it. Andy, thanks so much for joining us.